Hello, this is Scott and this is a Hype Report. Today's report is sponsored by the free book Ramblings of a Madman. Here are the quotes for various items. First, EU banks. A stress test on European banks is not even over yet, and yet these banks are being urged to boost their ability to withstand losses. The European Central Bank is leading the charge to prove the region's banks are robust. So if these banks are being urged to raise capital, does this mean that another bail-in is in the works? Next, the writing is on the wall. The Shiller price-to-earnings ratio shows that U.S. equity valuations are pushing towards crash-worthy levels. The higher the ratio, the more likely that future returns will run below historical averages. Future returns are likely going to be lower. Competition for investor capital will get even tougher. Next, Bitcoin for elections. The Federal Election Commission voted to allow political committees to accept Bitcoin donations and outline the ways that the virtual currency can be used by federally regulated campaigns. Bitcoin donations will be capped at a cash equivalent of $100 per person per cycle. Next, economic cycle. Does the economy move in predictable ways or patterns? If this is true, then 2015 to 2020 is going to be pure hell for the United States. The K-wave is a 60-year cycle that has nearly 1,000 years of supporting evidence, and we are heading right into the depression region that will last anywhere between 2017 and 2020. Next, climate economics. As if one had not heard enough, the worldwide economic woes are being blamed on the weather. This time, the Bank of Japan plans to blame the cooler than normal weather that triggered El Nino for the curb in spending in Japan. Forget voodoo economics, we have climate economics. Next, silver preferred. According to the Australian Mint annual report, the market overwhelmingly chooses to purchase official silver coins over gold. Silver beat gold sales by a margin of 98.7 to 3.7 million ounces. With the historically out of whack silver to gold price ratio, people know a bargain when they see one. Next, student loans. U.S. households are on an epic spending spree funded by what else? Student loans. Student loans rose $125 billion in the past year, and the student loan debt is over $1.11 trillion. This is a 12% increase from last year. So, how long will it take for the new and unemployed graduates to pay this off? Finally, please prepare now for the escalating economic and social unrest. Good day.